This is a potential short trade setup for CPE and really a component of the oil sector. And here we have crude oil WTI futures, 240 minutes, each candle representing 4 hours here. And really what we had was a primary downtrend line, primary uptrend line, plenty reaction validated. We had broken down here, had issued a sell signal off some SPR reserves. We had the Iran nuclear oil talks. We had Shanghai locking down, and that's what came with some of these downside effects here, in my opinion. And really, even for all those effects to happen, and we still are trading above $100 a barrel is pretty amazing, in my opinion. Going off the releasing a third of all reserves and the SPR releases, coinciding with that Shanghai complete full lockdown, just crushing oil demand, alongside that Iran nuclear deal. So again, we're at sort of an inflection point here. I have this primary downtrend line off that March highs here, plenty of reaction validated, really nice cuts in between all the wicks and candles in between each curvature. And really what we have here is, again, if we break out to the upside and start breaking above that 110 key level and backfill the gap at 112.40, what's going to happen is these negative divergences will start to get burned off. And really what you'll have is a huge upside momentum. We already have momentum in these indicators. There's nothing that's bearish right now. This is just an inflection point, in my opinion. And we're above all zero lines in both indicators. Everything's bullish. We're making higher highs and higher lows, and it's uptrending. This is a primary trend line that I have here, and a crack below, this primary trend line, which will coincide with the gap in the middle of March. Take out that 106.81. With you want to see a solid break below, at least maybe below that 106 a barrel, which would probably put in the sell signal. Solid 4-hour close. And I think again, we'll keep those negative divergences intact, and we could also have some pretty swift moves down in oil. And if we do get that break, again, there's probabilities are, hey, there's nothing here that suggests it's going to break. It looks like, again, we're just sort of at that inflection point in between and all out divergences. That's the only thing. There's nothing here suggests to go short yet until we get these solid potential breaks. And this leads me on to the CPE with the primary uptrend line off the Corona crash lows of 2020. Very amazing reaction. Sort of reminds me of that AMC primary long-term trend line that snapped below. And I'll give you an example. But really, some of these trend lines can be pretty special when it comes to stops and a lot of different things that start to get hit, and just a lot of stop setups around this a trend line of this nature, with beautiful wick cuts and again all in between gaps and all kinds of other multiple gaps and different curvatures off the wicks of the candles. Anyways, here we go. We got a put in a diversion high here. We do have a potential negative and bearish divergences amongst all three indicators. And if oil corrects, again, this is Calvin Petroleum CPE. I just like how the graph looks like, in my opinion. We just really have been building more divergences, more negative and bearish divergences that have been building. So again, what could happen is a solid break below that 58.03 price support, which coincidentally will take out that 50-day moving average as well, and a solid daily, hourly, and or 4-hour close, 2-hour close below this primary trend line, in my opinion. We'll start to get some stops to get hit. And my first target, again, we have to break 58.03 with authority to even start scaling. And again, that's why I make these videos ahead of time. My first target of that 51.41 price support for a 9.7% drop, down to 49.04 price support for a 13.8% drop, down to 42.29 for a 26% drop. And if things get real bad and demand gets crushed, 31.85 price support for a 44% drop. So again, this would be your trading range here, and that's why I would favor that 31.85, because this is your trading range here. And again, we snap down below it, and some stops start to get hit, especially with this volume price indicator right up here. So many bought the shares, bought at this price at this mid range around 40 to 51 bucks. And again, a lot of stops to get hit. break that 50-day moving average, put in, start scaling in a position. And if we take out that 200-day average, which will coincide with that 51.41 price support alongside that 49.04 price support, then we'll have a huge break in momentum indicators and only damage the indicators ever further. So again, just one to watch for now, and keep you updated if I see anything new that develops with these charts.